All right, let's go and get started. Good afternoon and welcome to the Sage Investor webinar. My name is Jen and I'm a co-founder of the Sage Investing Group along with Maggie and Lana. We are so excited to have you guys here, and today we have a very special treat for you. We are delighted to have our good friend, Arianne Lemire, join us as our guest speaker today. But before I introduce her, I just want to take a moment to introduce Sage Investing Group for those of you guys here who are new. And then for anyone who has questions, we will have time at the end of the session for Q&A as well. And now before we get any further, just take a moment to take note of the disclaimer. The Sage Investing Group webinars are for your education only. And although we all have the Sage Investing Group, we have a CPA background, we don't provide any legal, financial, or tax advisory services. So please consult with those respective professionals for those type of questions. And please know that sometimes we do share projected returns in our webinars as well. And please know we cannot guarantee any returns, and there are always risks associated with any investments. And so in one PowerPoint slide, this is the Sage Investing Group, along with our mentors, partners, vendors, and even our husbands made it on here too. So for all three of us here at the Sage Investing Group, we all have a Big Four accounting background, which means that our background is rooted in audit and risk management. So when you hear the word audit, you know that auditors are typically not most people's favorite professionals to deal with, unless, of course, we're on your side. And then, we do our jobs. You like it when we do our jobs to give you comfort over the financials and such. So, we're just very detailed people. We ask a lot of questions, and we really never believe anything anyone says unless we see the evidence. So although, not a very popular profession, we do see a lot of value in what we do. So long story short, we all left our jobs, our W-2 jobs in the audit profession, in accounting finance profession at various times during the past few years to become full-time real estate investors. So we leverage our combined 35 years of professional experience in audit, accounting, and finance, along with our real estate investing experience and our thousands of hours that we've spent underwriting multifamily deals to do what we do in multifamily syndications today. And that is we vet the deals so that busy professionals like you guys can invest with greater confidence in these private investment opportunities. And just in a nutshell, we currently have over 240 verified investors, and we have over 530 Facebook followers. And collectively, meaning as a group and on our individual investments, we have participated in 15 deals, totaling over 4,500 multifamily units. And that's a portfolio size of more than $497 million. So that's Sage. And now I'm really excited to introduce someone whom I have admired for a very long time. I first remember hearing about Arianne Lemire and her incredible story on Bigger Pockets 3 years ago. And at this point, Arianne and her husband, Chris, they were flipping homes, and I think they just acquired the first large multifamily property. So I remember feeling really motivated by what they were able to do at such a young age and thinking to myself, when I grow up, I want to be a multifamily investor just like them. So I was so compelled that I immediately requested to be friends with Arianne on Bigger Pockets. And while preparing for this webinar, actually, I found that email, which I sent to her 3 years ago, congratulating her and her husband on their success. So fast forward a year later after that, I was actually at a real estate conference in Dallas, minding my own business, getting coffee like people do at conferences, when I looked up and I noticed a girl standing next to me. OMG, it was Arianne. Needless to say, I was actually a bit starstruck and was so excited to meet her. And at this point, I'm not sure if she was ever flattered or if she just thought I was weird and crazy. But anyways, we ended up being in the same multifamily mentoring group. And over the course of over the years, we actually have become good friends. And I know Chris and Arianne, they're full of great information on some of my favorite topics like financial education and financial freedom. So they are founders of several businesses, one of which is called Wealth Gym, which is their mission there is to really help high achieving professionals as well as entrepreneurs fast track their way to financial freedom. So without further ado, I'm going to welcome Arianne to our webinar today. Hello.
Awesome. Thank you, Jen.
Yeah. You want to go ahead and share your screen?
Yeah, here we go. Can you guys see it?
Yes, I see it now. Yes.
Awesome.
Perfect.
Well, thank you very much for that very flattering introduction. And yes, I was very flattered. I'm like, oh, someone knows me. That's so cool.
You're very famous on Bigger Pockets, so
I know, right? Like I was probably like one of the fewer female Asian people on there.
Yeah, I know. Maybe that's why I noticed you so quickly.
Right. But yeah,
myself, yeah.
Thank you so much for having me. Like this is an amazing opportunity for me to talk to you guys. Thank you. Like I've been friends with the Sage team for a few years now, so they're amazing people, and you know, you guys who are in their investment circle are definitely in good hands. So want to talk today about how to fast track your financial freedom and how you can retire in 1 to 7 years. And some people have like a bad connotation of the word retirement. Like we've been retired for like 3 years now, and that just means our passive income pays for our needs and wants and more. But it doesn't mean we're not doing anything, right? Like we travel a lot, we spend a lot of time with family, but one of the things that we love to do is when you're financially free, when you're quote unquote retired, you can actually work on the things you're passionate about without having to worry whether it's going to pay you or not, which I think the reason we teach other people how to do it as fast or even faster than we got to financial freedom is so that they can really hone in on their passion so that they can, you know, like I think we're here all here for a purpose, and I want them to be able to share their purpose with the world as well, just like we're doing now. So a little background on us. So this is me and my husband, Chris. We've rehabbed and wholesaled over 500 single family homes in the last several years. We co-own over 2,000 multifamily units with partner investors, some of them with the Sage team. And then we travel 3 to 4 months out of the year. And our passion is helping others become financially free. So we didn't start this way, right? We weren't born with a silver spoon in our mouths. 6 years ago, we were just like most people and we felt trapped. So I was a speech language pathologist. Chris was a software developer, and we did what everyone tells you to do. We got good grades, got a good job, got married, and that was it, right? That was supposed to be happily ever after, except it wasn't. We after all the student loans, and I had a master's degree, so that was like 6 or 7 years in school. I was the only speech therapist in my building, and my family. So this is my brother here. He happened to live in New Zealand. I was actually born in the Philippines, moved to New Zealand, moved to Florida. And so Chris and I had great jobs, a lot of jobs, a career and a life that most people would say from the outside looks great, but like really we just felt so trapped because we couldn't see our family. I had time off, but I couldn't take it because I was the only speech therapist in the building. And so we just started looking for a way to remove us from this like nice little trap we got ourselves into. And that's when we realized things had to change. And we became obsessed in answering this question: how can we do what we actually want to do without worrying about money? Right. And what we found was passive income. And I want to share our definition of financial freedom to everyone. It's passive income pays for your needs, wants, and more without having to trade your time for money. And that's so important, like the last bit, without having to trade your time for money, because I think sometimes when we kind of embark on this financial freedom journey, we still keep trading our time for money. And what the wealthy don't know, right? Like most of us weren't born with $1 million trust funds. Those people never have to trade their time for money, and they were taught that way to not trade their time for money. But us who were brought up in like middle class families, uh, nobody really teaches us that. We just get taught to trade our time for money. And so what we really need to be able to do is have assets that also provide passive income, that no matter what we do, whether we work or not, whether we start a business or not, whether we go to our job or not, we have that passive income coming in. So fast forward to today. I know I mentioned all the cool stuff. We flipped houses, own 2,000 units and all that. But what I'm most proud of is that we are able to spend time with family and friends. So this is us. We just got back from a 3-week trip to Italy. Uh, right before COVID, we flew to Australia, New Zealand, and Hawaii for a month and a half. So really cool stuff. We're so blessed. We're so thankful that we can do this. And the main reason we talk and share this now is because if we can do it, you can too. Right? We didn't really know how we could do it before, but now that we've actually gone through all the steps, we want to share how we did it so that others can have the freedom that we have. So what you learned today is what is the financial freedom number, how you calculate your financial freedom number, what lazy money is and how you can put it to work. You're going to know how to implement the 3 wealth creation habits and some myths about money and financing. So let's start with the financial freedom number. So really all this is your target passive income per year, right? And then we also have the financial freedom fund, which is how much you need to invest to get your financial freedom number. And I will share our Wealth Gym calculator Lite to show you how you calculate that really quickly, right? So you can download this for free here at, I'll share this link at the end. But basically you put in what you want for passive income per year. You put it in there. This adjusts for inflation, only 2%. I know we had a lot of inflation recently, so we might have to adjust that. The good thing is, since you're in this Sage webinar, you probably have access to a lot of real estate opportunities. And thankfully, that real estate opportunity will kind of adjust with inflation. Target average annual return. So you can adjust this to what you're investing in, right? So if what you're investing in is going to yield 7%, you put 7% here. If it's going to yield 10%, you put 10% there. So whatever it is you're investing in, just change that. And then you'll have the target financial freedom fund, which is how much you need to invest so you can have this much in passive income per year. So basically just change that depending on your goals and needs, and it's going to show you how much you need. And like, I know this looks super simple, but if some of you are familiar with how most people are trained to be able to retire, it's a really kind of depressing calculator, actually. It's some of you are familiar with the Trinity study. Basically, there was this huge study about tracking like investment returns in the stock market and how much you need to have like as a nest egg to withdraw from, so that when you die, like you end up with zero. And that was like, I started using that calculation before, and it was actually kind of like depressing because when we were trying to retire early, we were in our 20s. And the Trinity study, I think, has you retiring at like 50 or 60, right? So you really only had like 20 years to retire. And anyway, it was just not a great retirement calculator for me. So we made this, so you can do this. You can do this too. Anyway, back to the presentation. So we went through that samples already. And then we also have kind of a full version of the calculator. So this is the one you saw earlier is the light version. We have one that kind of goes through a lot more of the things we're going to talk about today, because it's like our financial picture is actually there's a lot of moving parts, right? And this one in Wealth Gym, we created a financial dashboard for people so they can see their progress towards financial freedom. So basically you put in like all your income, passive income, your expenses, and things like that. And it shows you how much percentage of your expenses are covered by passive income, and it separates it by needs and wants. And you scroll down, it even gives us like the time to achieve financial freedom. So we separate it into two categories. There's financial freedom level 1, which is your passive income pays for your needs, right? So your basic living needs. And then level 2 is where your passive income pays for your needs and wants. So for this particular person, it's going to take them a year to get to financial freedom, which is awesome, right? Level 1, and then 5 years to achieve financial freedom level 2. And they can even change their investment returns here. So if they invest in something that gets them a higher return, it speeds up their financial freedom date. So that's like one of the levers that you can use to speed up financial freedom, is investing in something that gets you a better yield. All right. So we talked about that. Next one is lazy money. All right, lazy money. So what is lazy money? And this is one of the ways you can fast track your financial freedom, right? It's by finding lazy money. Lazy money is all the money you have, whether you know you have it or not, that's not helping you get towards financial freedom, right? So what we want to do is find all that lazy money and make it work for us. So here's some sample of what lazy money is. So if we scroll, we have a lazy money tab in this calculator. Okay, so there's this, the first line is cash available over your safety net. So your safety net is your 6 to 12 months of reserves for your personal expenses, right? Like that's what we recommend investing in first, because you have peace of mind. You know that no matter what happens, you have 6 to 12 months of your life covered and not have to stress out about it. Right. But above that, if you have extra money on top of that, then that's lazy money sitting there not doing anything. So for this person, they have 37K of lazy money in that bucket. This is real estate equity up to 75% LTV available. So basically, this person probably has a couple rental properties that maybe are completely paid off that they're not tapping into, or have 20% leverage that they're not tapping into. So they can tap into potential 275K of lazy equity and redeploy that. These are other assets with equity available. So there's a tab in assets where they can, in stocks and other assets, they can check if it's easily liquidated. So they can potentially redeploy that in something else. And then we also talk about like potentially tapping into your personal residence. You could potentially put a HELOC on it or refinance it. And then we have life insurance cash value for those of you who have a high funded whole life insurance. So basically what this does is it shows you all the lazy money you got. And then you can put in potential what things cost you, right? So like what's the annual return you expect if you do tap into that lazy money invested? What's the mortgage rate if you, because some of this is getting a new mortgage, right? So what's the expected mortgage rate for that new loan? And then effective tax rates on sale of other assets. So if you do use other assets and you decide to sell some stocks, then you're going to have to pay capital gains tax on that. So you put the tax rate here. And then here's the life insurance loan rate. So anyway, like this calculator kind of shows you the actual net, not just what you would get for the investment, but it actually deducts what it would cost for getting a new loan and all that kind of stuff and paying off the taxes. So this person, if they tapped into all their lazy money, they would have an additional $3,500 a month in passive income. And then their total passive income would be $4,600 a month. So now their new timelines, right? So earlier we showed you timelines where it would take them a year to get to stage 3, which is financial freedom level 1, where passive income covers your needs. It would have taken them a year. If they tapped into their lazy money, they could actually do it now. They'd be financially free now, right? And then for level 2, where their passive income covers their needs and wants, it would have taken them 4 years to get there if they didn't tap into the lazy money. But now, because they want to tap into the lazy money, it's gonna just take them 2 months, right? So they can like retire in 2 months with their needs and wants paid for. So pretty cool stuff. And a lot of us have that lazy money sitting around somewhere, especially if we've been, doing the stuff we needed to do over the last few years, which is save and invest and all that. Like usually there's some lazy money sitting around somewhere that we can tap into. All right. So that's lazy money. And we'll talk about some beliefs, right? So most of us were raised by our parents who taught us certain things. And a lot of the beliefs we have now are from facts from 10, 20, 30 years ago, not necessarily facts today. And we'll kind of go through some of those things. And I just want to note that 10, 20 years ago, like some of our parents had loans at 18% for their primary residence, right? So for them, it really wasn't a good idea to tap into their lazy money and refinance it, right? Because it was going to be an 18% interest rate, and what they can invest in a 10% return, they would lose money. And that's how, like, when it got passed on to generations, we were all taught to say, hey, after you save, after you pay off your debt, you pay off your house, and that's it, right? Because back then that was the plan to retire. But right now it's different. It's very different. So we're gonna talk about these dilemmas, right? Like usually you'll have people who say, yeah, get a 15-year mortgage versus a 30-year mortgage, and that's better because you save interest, and pay off your house first before investing because that's better, right? But again, like those came from beliefs from 10, 20, 30 years ago that don't necessarily apply today. Or I mean, it could be a personal decision, but like numbers wise, if you like solve for it, it's not really the best. So my husband Chris, he was a software developer, so he's like super great with numbers and all that kind of stuff. So he actually like modeled the 30-year versus the 15-year financially. So there's like this huge spreadsheet if you want to see it. But this is the summary of it pretty much. So this is a person, if you see here on the bottom left, they buy a house for $250,000 with 3.5% down. So normal, like first time home buyer couple. Um, and then their interest rate right now is 3%. I know some people have gotten like 2.5 recently. And then if they invest in something, they could have gotten a 10% return, right? Like maybe they're talking to some multifamily investors and they can get that return there. Now, this calculator compares if they just used a 30-year mortgage, and instead of having the extra payment for the 15-year loan, right? Because with a 15-year loan, your payment's actually a lot more than the 30-year. They invested that difference into a 10% investment. So in that 30 years, this person would have gotten an extra $1 million total, right, in growth. And then that would have meant an extra 8,600 a month in cash flow. So just by picking a 30-year mortgage versus a 15-year mortgage, they net an extra $1 million to their net worth and an extra 8,600 a month in cash flow. All right, so this is the pay off your house early dilemma. Again, this was another financial modeling. So Chris pretty much modeled, hey, what if you, instead of paying your house early and add 200 a month to your house payment, instead you invested that 200 a month into something else that got you a 10% return. So the difference is they would get an extra $189,000 total, right? That's additional to their net worth. And that 189,000, if invested at 10%, would get them $1,500 a month in cash flow. So their mortgage payment is like $1,000 a month. And if they had paid off their mortgage payment early, they would have removed $100 a month in their expenses, right? But they lose out on $1,500 a month in passive income. So they net negative really in that scenario. And they net 200K less in their net worth. So I think it's important to just like challenge some of the beliefs that we're taught, because a lot of those beliefs come from 20, 30 years ago, and they might not necessarily apply today anymore. And, if you knew, if there was a sample couple, right, who did these two things, right? They bought a house, and they paid it off early, and they did a 15 versus a 30 year, they would have missed out on, right, like $1 million and 8,600 a month in cash flow plus this, because they would have done both. So not a great deal for them, but they don't really know any better. So it's kind of up to us to like help educate people on that. Oh, and this is the tab we were talking about earlier on how to what sources of lazy money are out there. And then we have our 3 wealth creation habits. So number 1, like this is the secret to how we became wealthy and financially free. And this is still the secret to how we continue to become wealthy and continue to become more financially free. Is number 1, we track our financial freedom numbers every month. So we update a calculator. If you use a spreadsheet or something else, do that. Just make sure you're tracking it consistently, month over month or quarter after quarter, whatever the cadence you prefer. You want to see how much progress you made. And the magic isn't necessarily you putting in the numbers in, it's that what we focus on expands. So if when we see that, hey, my passive income didn't increase at all this year, right? That's kind of like a reminder for us that, hey, I need to do something to increase that. Number 2, have a regular family meeting. So what is a family meeting? It's really just a set time. We do it once a month, a set time once a month that we are just going there to talk about our goals as a family and our family finances and our progress towards investing in financial freedom, and then the actions we need to take next month. So I know we talk, like my family is me and Chris, right? So we talk a lot, but there's something in having a specific time dedicated just talking about goals and talking about our financial freedom numbers and the actions we need to take that kind of helps us make that progress month after month. The number 3, invest regularly. So don't try to time the market. One of the things we do at our family meetings is we talk about our investment goals for the next 3 months, and any lazy money we have above our safety net, we will deploy it in the next 3 months. We don't wait for home runs because singles and doubles win the game. So if we waited for a home run and it took us 2 years to wait for the home run, we would have missed out on so much returns over that 2 years. And guess what? Like, we've been investing for 6 years now. The home runs, the ones that look like home runs, a lot of times don't end up being home runs. They just become like a single and double. And the singles and doubles that didn't look like home runs become home runs. So like, you don't really know what's going to happen. So it's best to just keep investing consistently. And throughout time, you will hit singles and doubles for sure, but you will hit some home runs. But if you don't invest and you just wait there and you say, hey, I want to find a 50 IRR return, right? Like, you're going to wait 5 years. And if you had just invested in like 10 or 15 IRR returns, you would have gotten way more money anyway. So those are our habits. So how to get in touch with us? You can download the free the light calculator that I showed, the first one, at wealthgym.com/YouTube free. I also have a YouTube channel. And if you go to wealthgym.com, you can see links to my social media, free and paid programs, and all that kind of stuff. And then here's my email. All right. Well, thank you guys. Thanks for listening. Really appreciate you. And I will turn it back over to the Sage team.
Keep it on. You can keep your screen on there. That's fine.
Okay.
Yeah. Thank you so much, Arianne. That was such a great presentation. I think we all learned so much from it. And I feel like next time I have any financial questions, I really need to call you up. You are a wealth of information. So really appreciate that. Do you guys have any questions that you want to ask Arianne?
No questions. Yeah.
No, I have some questions.
Okay. Hi, Aaliyah.
Hey. Hi.
Hey.
So Arianne, this was amazing. I mean, really amazing. I mean, Neil and I are in an interesting position right now, similar to where you guys have been. And, I'd love to be able to do something similar to what you guys are doing from teaching perspective. And of course, you already know we have our financial freedom. So, but one of the things that trips me up sometimes is this question. And I think you guys might be in the same position. We have no children. And we too were tech people. And we've also started 15, 20 years ago. And so a lot of people that we're meeting go, well, that's nice and all, but you don't have any kids and that's expensive. And if you had kids, you wouldn't be where you are today. So can you answer that question, how you would answer it?
So I usually like lump in other people we know together that have children. Because I mean, I can't really. We don't have children, so we just usually will say, "Hey, but so and so doesn't have children, and they did it too." Um, that's usually how I go about it. But like if we're actually close to these people, and if we have time, then I'll kind of ask them, "Well, but is like I understand we're in different situations, and everybody's going to be in a different situation, but at the end of the day, what is it worth it, right? Is it worth going on this path for your children, right? And if it is, it's not really a matter of it's not a matter of like I can't, right? Stop saying I can't, but just think about how can I, right? So yeah, Leah and Neil, Ariane and Chris didn't have kids, so some of the things they're doing are a little bit different, but my kids are worth it, right? Like my kids are worth getting financial freedom for. So I'm gonna ask, how can I get there while having kids instead of I can, because that's what matters, right? Like it doesn't matter like where you are right now, but you know you can get there. You can mention Maggie. Maggie has kids.
I'm curious. I wonder if, I'm in a position where I don't have kids either, but your calculator, Ariane, where you showed expenses that are needs and then, or, expenses for like wants, that would also help on a very individual basis. If the person has kids, they can put in the calculation of kids to account for, okay, all these additional expenses. It might take longer till that person achieves that financial freedom, but it's not impossible, right? It's just having to sit down and going through the exercise, to your point, the why, like, the how to get there. But it looks like your calculator also kind of accounts for that. If I'm
and that's why
right?
that's why we do that. And it sounds so simple, right? Separating your needs and wants. But I think a lot of financial freedom and even the journey to it it's a lot of mindset stuff, right? It's a lot of like, oh, I can't take this risk and start this multifamily thing because I feel like if I lose money, I'm doomed, right? But when they actually put in their numbers and see that, oh, my actual needs are like 3,000 a month, but my wants are another 3,000, that's where I get my 6,000. So their risk, and maybe they already have like 12 months of 3,000 worth saved up, right? So the risk of taking this opportunity might not be as big, and that might be what gets them to that financial freedom faster. So it kind of helps with like that mindset of fear. Like it removes fear, because when I can see, okay, like my needs are 3K and I've saved up 100K, right? Like I can live for like I can cover my needs for that much longer instead of maybe 6 or 10K for needs and wants. So it does help, I think.
Yeah, I just wanted to echo what Lana had said. I have 2 boys, and similarly, just when I calculated my own FI numbers, I just like for family vacations, it might just be double of what someone without kids has. And, obviously we add in like sports in there and maybe some tutoring and whatnot. But it's the mentality, everything is very similar. It's just the numbers might look a little bit different, and they still can calculate everything out just the same way.
Yeah. Another thing to think of is income shifting. So if some of you do have kids, and that's something we can't use because we don't have kids, right? But there's so income shifting is when you have your kids help out, and then you pay them a wage that is commensurate to what they're doing. So if they're like putting up signs on your open home, or cleaning the room, cleaning your new rental, whatever, or watching a webinar and taking notes, like you pay them commensurate to that. But what that does is it removes that income from you because you pay them, right? So it's an expense to you or your rental business. And then it's now an income for them, but they don't pay taxes until 12K. So you can actually make it so they're learning about wealth and work and just getting good values. It removes your taxable income from you. And some of us, if we're in California, we might be in 50% tax bracket. So it's a lot of savings. And then they don't pay taxes on it. And then they can use that money to pay for their sports and pay for their portion of the vacation and stuff like that. Obviously, they have to be a certain age to do that. But that's one way, that's one strategy that we can't employ that people with kids can.
This has been super helpful, and I really do appreciate everything that you have provided. And thanks for answering that hard question, because I have a, typically for Neil and myself, having no children, I kind of don't see that we don't have our own biological children, but I have about 9 to 12 nieces and nephews that I'm consistently teaching these financial freedom methodologies, because my whole family does not understand what we're doing. They think we're cuckoo. We live on the West Coast, so they think we're crazy. And but at the same time, most of the family has done the military route, right? They have put their W-2s in through the military. They're looking for their pensions that way. And when I start looking at the calculations of what they are now getting on their calculations, it's nothing compared to what I would expect, you know, putting in 57 some years or 35 years to a military pension would do for you, and it's not. So it's interesting now being the youngest of 4, and they're seeing I did it differently, and they followed the government way of 401ks, IRAs, own your home, all of that. And Neil and I are not in that position, but have a lot more wealth than they all do, and have the freedom that you're talking about as well. So, you know, I really appreciate what you're doing, and keep spreading the good news, good word. And Sage Investment Team, as always, you did a kicker job today. Thank you so much for bringing Arianne to the team and to this webinar.
Thank you so much, Aaliyah. Really appreciate that comment and your questions. Always so very
Yeah,
insightful.
thanks, Aaliyah.
Yeah, and Aaliyah, I do this similar to my nephews and nieces. And you know what? I found that, and you might already be doing this, but what resonated really well was when we're playing that cash flow game from Kiyosaki with the kids. I don't know if you've tried that, but that's pretty effective.
Hi, here I am. Yes. So we have the cash flow game and the second version of it. And I have been doing that with them because my parents did not teach us, you know, financial stuff. It was, you know, zip the mouth. You don't need to know about that. You know, we take care of it. That's parents. And I really wish that they had talked more about money with us. And that's why Neil and I make it a conscious effort that even arguing, or arguing is the wrong word, but, you know, heavily discussing conversations that we disagree on. I feel it's important for people to see that, like, we have a loving relationship, but can also work through those differences, and how what finances is. My kid, they're not even kids anymore. Some of them are in their 20s and 30s, but it's like, I feel it's important that they know how much money Neil and I have, because they also saw us when we didn't. I mean, we put everything on the line for our company, and like that to me was the biggest thing. And they now see where we are, and they know that it's worth it. And so it's really important for me to be sharing that. That's my legacy. Is it's not going to be biological to me. It's going to be sprinkled across everybody and everybody that I see. So yeah, it's wonderful that you guys are doing this.
It's awesome. Well done.
I just want to share a couple of comments, not really questions, but thank you for your time, Arianne. This is really helpful. Oh, dry mouth. So I just want to wrap it up that it just thank you for sharing this, because it's not just, sometimes we talk about mindset, a lot of it, but what you did here is just really give us a practical way path forward, and it's really like helpful to actually visualize that it's not that hard. But I think the other thing that's resonating with us is that you do have to make a conscious effort and a habit to build this wealth. It's not going to be overnight. It's going to be a couple years, but there is a path to it, and you got to start now, and you have to build habits in order to get there. So thank you for sharing.
Yeah, thank you for having me. Really enjoyed this.
All right. Well, thank you so much, everyone. Yay. That was really fun having you on, Arianne. So I'll go ahead and send a recording of this webinar to everybody afterwards. But thank you so much, guys, and have a fabulous rest of the day. Thank you so much. Hope to see you guys next time. Okay. Bye.
Thank you.
Thank you.
Thank you.